Yournest, an early-stage venture capitalist fund, was launched during the end of last year. It was founded by former Bharti Airtel CEO Sunil K. Goel, Mr. Girish Shibani, who has been a former executive in Dabur, and also Mr. Sanjay Pandey, who has been a mentor and a trainer for various successful tech startups and corporates. Additionally, Sunil has also been the member of TIE India Angel Network and Mumbai Angels and has led 8 investments very successfully. It has been learned that Yournest is looking at raising 120 crores from various HNIs both in India and from abroad. It is also looking at investing about 12 to 20 tech startups which are India focused and product centric. A month back, it closed its maiden investment in a video analytics company, Proof of Performance Data, which is scaling up to a great level. And not even a week back, it partnered with K Capital to be a part of Venture Nursery and Incubator, which has been recently launched to be a part of their Chartered Angel program. And it's not even a week back that it has partnered with Cape Capital to be a part of recently launched Incubator Venture Nursery's Chartered Angel program. So today we have Mr. Sunil K. Goel and Mr. Girish Shibani from Yournest to talk about future plans of Yournest and also the investment scenario in India. Recently you have joined hands with K Capital to be a part of Venture Nursery's Charter Capital program, and if you can tell us something about your role in it.
See, Venture Nursery is an incubating program. What is happening is now the entrepreneurs and professionals who are experienced are coming across to help the new entrepreneurs, guide them, mentor them and make them investable companies for angel funds like Yournest Angel Fund or K Capital to invest in them. So both of us are charter angels. We are promising to mentor these 12, 13 shortlisted incubation companies that we will go mentor them, and if they are investable, some of them will be investable, we will be the front runners to invest behind them and take them forward from incubation to early stage venture.
This is another step in basically trying to build this angel investor ecosystem. You know, it's very nascent in this country, unlike in the developed world where there's a lot of activity in this space. So this is one additional step in that direction to build this ecosystem.
Okay. Yournest also made its first close a couple of months back with Proof of Performance Data. And but by when can we expect another closing of your investment? And how are you approaching the startups and how you're kind of looking at them?
See, we have been looking and talking to entrepreneurs for the last 1.5 years. Continuously we've been meeting them, interacting with them, identifying those companies, and hence we've been in advanced stages of discussions in the last quarter with few of them. Proof of Performance obviously was our first investment post the closure of the fund. Now we're looking forward to invest in 2 more which we've signed up, and you will be getting to know about them much sooner. They're all IT technology enabled companies. They are the companies wherein we know the scalability and the vision that the big picture is far bigger, just like Proof of Performance. It's not that it's something which anybody else or even around the world is doing around that. We've identified a niche and we're going for that.
Okay, and earlier we have read that you have plans for of investment in about 12 to 20 companies, but what's the time frame for it? And you've also managed to raise about 100 crores for this investment. So what's the time frame you're looking at? And till when do you think that this money which you've raised will last?
First, we are targeting to raise over 100 crores, and now thanks to the new regulation we will be raising 120 crores as a fund. Of the 120 crores, around 70% of the money will be committed in the first 2 to 3 years. This will be committed in 15 to 20 companies. The balance money will be retained for subsequent round of funding, those companies.
The idea here is to basically ensure that there is not only diversification from a portfolio perspective, but there's also diversification from a time perspective, so that you really don't want to concentrate all your investments in these companies immediately. So we are basically giving that benefit to our investors as well.
Okay, and going back a bit further, what was the idea behind launching Yournest?
See, we've been members of Indian Angel Network, members of Mumbai Angels, very active at TIE, interacting with entrepreneurs. Being an angel investor, we could see that the speed and 100% focus and attention if we give to an entrepreneur and a company, the probability of building that business is significantly higher. If you are doing it as a focused business, a stage specific fund, and you're dedicated, three of us, me, Girish and Sanjay, we are 100% dedicated to only building big businesses. Once you have that focus, it will not only yield results for our investors, but the entrepreneurs will get the benefit of our experience of building businesses and nurturing talent.
Okay.
Also as because of the frenetic activity that is happening in this place, I think there's a crying need for this ecosystem to evolve. And I think the market is big enough for more players to come in a structured form and manner to attract more people to come and take the entrepreneurship plunge. And the thought is to basically be kind of a pioneer in this space and help build the ecosystem on an ongoing basis. Make sure there is enough traction both from a entrepreneur as well as from the investors to ensure that this entire thing becomes large enough as it is in some other parts of the world.
Okay, but where are you getting this money from? Like, is it institutional or very HNI?
It is at this point in time coming from the HNIs who have been successful entrepreneurs, professionals who have built businesses by themselves. They are exposed to the industries like telecom, technology, e-commerce, education, financial services, private equity, etc. They know that there is real level first generation entrepreneurs are actually building good amount of businesses. Okay. So once people who believe in that are coming and investing with us. And that's the fora that we happen to encash on. We will continue to raise money from the high net worth individuals in India as well from overseas. Okay. In addition to that, there are going to be monies that will come from the institutional investors too. Would
you like to name some of them?
Not right now. Let that come in. We are in discussions, including fund of funds, limited partners internationally. Yes, they'll come in.
Also, the benefit of going down the professional and the HNI route is that now today I have a ready pool of 40 investors who I can bank on or lean on for not only the capital that they've committed to the fund, but also to build these companies, get their operational skill sets into play, help these guys to come in as mentors to these companies. So at a larger scale, we are, as I said, so my focus is basically to ensure that there is an ecosystem that we build around it. So the investors are also a part of that ecosystem, as mentors, as business leaders, as professionals, as successful, first generation entrepreneurs themselves. So that's the whole idea, to get this, going as soon as possible.
Okay, so how is the model? How does YourNest work? So it's an investment cum incubation center?
No, we are a post-incubation early stage venture capital fund. Okay, so there's a definition. Because we are raising money from the HNIs, we want to reduce the risk by investing post-incubation. That's the reason we picked up the first company, Proof of Performance, which was nurtured by IIM Ahmedabad Incubation Center. The future companies are going to be coming through other incubation centers. So the clarity of thought is that the project must have proven its concept, technology developed. There is some customer who comes and says, yes, this product is working for us. Okay. That's the time we come in.
Basically, it's like a seed developing into a plant. Like on that process, in the juncture, you're trying to provide mentorship to them.
Correct. But that does not preclude us from getting involved with these incubation centers. So a substantial chunk of our deal flow will does and will come from the incubation center. So we are involved with the incubation centers, but purely at a mentor level, not necessarily as an investor at the stage of incubation.
Okay. If you can just tell us, the ticket size of your investments, like the average ticket size that would be for all the investments.
See, we believe that we must, post incubation, give them enough money for them to enhance their intellectual property. They enhance their geographical reach. They're able to identify right kind of people and build that companies from that point of view. For that, around 3 to 5 crores are required in any venture. This is the kind of capital that we give them initially, but we have a cushion to go up to 9 crores in one investee company.
Okay, but at a different stage.
At subsequent
But
levels.
not at one go.
No, one go it'll be anything. It'll be around 3 to 5 crores kinds.
Okay.
Yeah.
So, but it can go up to as much as 9 crores.
Yes.
But not more than that.
Not more than that.
Okay. And if you can just talk about your team, how big is your team, and
So we are 3 members.
Okay.
Sanjay Pandey, who's not amongst us right now. Sanjay Pandey is the founding member, who is the person who has the skill sets of building teams, developing strategy, leadership development, and mentoring and coaching. He's the person with that skill set. Girish is the person. See, today's time, any company needs a huge amount of data analytics, analysis, processes. Girish brings in that with his IT consulting background, and I'm the person who's had worked for 2 organizations only towards building businesses and doing transactions on those companies from a corporate side. Those are the ones which are helping me to build businesses. So 3 of us, supported by a 3-member team: investment analyst, investor relations, and the secretarial and admin stuff.
Okay, but any plans of hiring more talents? Because once you have more companies in your portfolio, you would definitely need more people to take care of them.
As far as investment decision is concerned, it rests on 3 of us. It is our neck on the block. In case something goes wrong, we won't be able to delegate that element of the business ever.
Not.
But yeah, we will have
looking after maybe other.
We will have we'll strengthen our investment management business. We may have a principal officer. We may have a additional portfolio management person or a deal flow person. So those are the kind of profiles which are there in our organization structure, which will fill as we build more and more portfolio companies.
A point I want to make here is that the 3 of us bring in the complementarity of skill sets that is required to help first generation entrepreneurs build businesses. So I think that was the key in the 3 of us getting together as well.
Okay.
And that, to my mind, is a much more important factor in getting the kind of deals that we get than the fact that we can write a check.
Yeah.
So the benefit that we bring to the table with respect to the entrepreneur is that he not only gets the money, but he also gets access to about 55-60 years of work experience in different verticals, where each of us brings in a specific skill set that he typically needs to build his business.
Okay.
Supplemented with the investors who want to actually mentor some of the companies. So that is another additional resource pool that some of our investee companies get.
Okay, and coming back to the general perspective, there have been some regulations for VC funding of late.
Yeah.
So how do you think it is going to affect the VC funding scenario in India, and also internationally, and also what are its implications and impact?
Must highlight that this is a very, very important development that has happened in 2012. I would say that this year will be known as the birth year for the venture capital in India. It's been the year, venture capital has been there for 18-20 years in the country. But there's significant changes. The new regulation that has come in SEBI for the first time saying is the venture capital has a positive spillover effect on the economy, and hence it will be eligible for concessions, benefits, etc. from government as well as from SEBI. That is going to be one encouraging step. The government has today said the pass-through benefit will be there 100% for 100% of the investments of a venture capital in the country. So there is no risk of double taxation. Third, any international investor who is going to be investing in domestic venture capital funds, that tax rate is going to be 10%. For the first time, private equity or venture capital is going to be equal to FII money. And today, whatever state of Indian economy is, we need long-term capital coming into the country. And the long-term capital does not come from FII, it comes from the venture capital and this thing. The money that will come to us will be 5 to 8 years. And if that kind of money starts coming in because of these changes, which are positive changes, investor interest has been totally taken care of in the new SEBI regulations. Second thing is this 10% tax rate. At least we are at par with FII. Sooner we know that we will be better off than FIIs, because the government will see the positive contribution being made by us.
Okay.
So these are good developments.
So if you can just speak about the scenario of early stage investments in India and how it has changed over the years.
See, the best part is when we conceptualize your nest, we were seeing only 30 to 40 ventures being funded in India. Simultaneously, we were seeing that a lot of entrepreneurial activities taking place. What was coming in the press and being talked about was the person who has started a venture rather than the one who has got a good job in a MNC, this thing. That cultural and social change was taking place, and simultaneously that industry which was so small, we were sure that it will grow at 100 to 200% every year, and we're seeing that now. Today, it is the only thing that we can say is growing in India and even in global economies is the first generation entrepreneurs starting new ventures, and that activity is going to fuel the economic growth as well, because more and more SMEs, for the country to sustain 7 to 8% growth rates will come in only through this channel.
Okay, and another thing, considering the situation right now, it's often said that getting early stage fund is comparatively easier than getting subsequent rounds of funding. So what do you feel about it? It's really so?
No. I don't think we should build a false hope for anybody. Each element is tough. You have to be so unique to be able to get any level of funding at any point in time. Any venture capital fund receives 100 proposals and invest only in one. So if that is a scenario from 100 is to 1, that's the kind of ratio that is there, you are disheartened most of the time. And it is not the case at private equity, it is the realistic case even at the incubation stage or even at the early stage. That challenge will continue, and the importance of that particular, with so many institutions being there, the entrepreneur gets mentored every time. If he is getting rejected, it's not rejected that he is not good or his idea is not good. It is that he has to improve a little bit. He's just improve a little bit. Moment he does that, he's ready to be funded by any one of us.
Okay.
And I think the parameters of successful companies pretty much don't change, whether it is at an early stage or at a PE stage. So what you would look at from a team perspective, from a service or a product perspective, from the business model itself, it will evolve between stages. But the fundamentals of having a good team, or of having a sound business model, of having entrepreneurial capability, and break away from the shackles of being managers. I think that is pretty much the chasm that one has to cross to get into this mode. And so those fundamentals don't change whether you are at a VC level or at a PE level.
Let me add, at the early stage, we expect the entrepreneur to be batting on the front foot always. He has nothing to lose at this particular point in time. If we find a gentleman like that, the probability of us investing in him is much higher, even if his business model is not comprehensive or complete. We will be jointly together, we will challenge and redevise or devise the business model. But his aptitude and abilities to be able to, once he starts demonstrating that, his probability of being funded is easier in an early stage.
Okay, investors often say, like especially angel investors or seed funders, they often say that we always look for startups who are very innovative. So now you being one of the angel investors, what are the things you look at while you're choosing a company for investment?
We would never like to invest in a Me Too business model or a business idea. It has to have uniqueness. It has to meet an emerging customer need. It has to identify what are the social and economic changes that are taking place. Is the business model trying to address that new need? If somebody has done it already, we can follow it up only if we see the execution capability of the new team is going to be far superior than the earlier teams that have been there, which is not so easy to do. Hence we always keep talking about we need something differentiated. Now that differentiator is not easy to find, but if it is a entrepreneur who is continuously thinking, redevising his strategy, he will be able to mold his business model based on the feedbacks that he gets.
Okay. And coming back to your first investment in proof of performance data, how is the company shaping up now? How are you helping them to kind of scale up their business?
So when we started looking at proof of performance, about 3 quarters back, the business model was already there. But what we've been able to help Harjap, who is the managing director there, and his team do is essentially bring in operational skill sets, get in the right kind of people, create operational efficiencies, put in mechanisms in the business where the focus on the revenue generating part of the business is much more now than when he came to us when it was purely on the operational side. So a lot of hand-holding, mentoring, feedback has gone into the process to bring it to the level that it is now. Proof of Performance is already talking to large advertisers and media owners, etc., to basically get them onto a subscription-based model that they have now perfected and gone to market with. So things are moving in the right direction with Proof of Performance, and we are happy with what Harjap and his team are delivering.
It's a totally new solution. We know that when the customers will see their presentation in the coming days at one of the conventions, they will be awed. They will be surprised that somebody can come and bring such a perfect information for them to take decisions. Similarly, the government is going to be looking at them. So we're looking at a new market being created by Proof of Performance. Just watch them.
Okay, and what are your views about investor-led consultations? It has really become a phenomenon now, thanks to the latest Flipkart Let's Buy thing. We have been seeing companies being taken over, then getting shut down. So how do you feel about the whole scenario?
It's the process of shutting down some of the businesses. That can happen through mergers or some good companies which can leverage each other. In our belief is in e-commerce, the consolidation may not result in yield the benefits that normally we used to see from mergers and acquisitions, because you're not acquiring geographies, you're not, we have to evaluate, means every business is different. There could be situations wherein you're buying something new or different capabilities or different product segments, etc. But it's something, me too, obviously it is for the ease of enabling an exit in a scenario like that. That is going to be few and far between. The more so are going to be one wherein the mergers add value to both sides of the table. For us, not only mergers are the good things, strategic buys are the good things, growth VCs investing in our companies is a good thing. So we look at the overall thing, but mergers is one thing where 90% of them will be for mutual benefit rather than exit.
But how do you think that common investors in their portfolio companies play a mediating role in the mergers and acquisitions? How do they do it?
If there is a timeline for exit, let's say, okay, in a fund like ours where the life is 8 years, when the life is approaching, one has to look at that we need to find an exit in some way or the other. That's the one scenario which is a pressing need in that particular time. It is a mutual consultation, consensus process. Are we making a company which is amongst the top 3 players in that particular category? If yes, you will be in a lead situation, you will be able to have different kind of exit routes. But in case you're not amongst the top 3 or top 2, it is always going to be a deliberation. Can we merge with somebody? Can we enable you to find the right partner? Because as an investor, you have a visibility of a far wider ecosystem. You would have participated in your life in around 30 to 40 companies, and you will have a better visibility of who would be needing what. It's been happening all across. We know that ages back also investors realign themselves that the assets of telecom cannot be with some other company. They should be merged with one telecom entity, even if they are invested in some other businesses also.
Okay.
I think the fundamental of doing this is the lead investor and the promoter both have to see value in marrying with another company. Until that happens, if it is done only to get an exit and bolster somebody else's balance sheet, I think that is not going to work any longer. It's more about what business value, what is the value. All of these activities have to be value accretive. They cannot be value decretive. So in that sense, that is, I think, more critical, and that's what Sunil also said.
How's the tech startup scenario in India, and how is India lagging behind other developed countries in this whole situation?
I now won't say that it is lagging behind. The amount of intellect that is available from the high-tech companies, people like us who have walked out of companies after experience from Google, Yahoo's and various other companies, telecom and large companies, we are all coming together to mentor those things. That was the ecosystem that was there in Silicon Valley. Today, once we have crossed 20 years in a corporate, we are itching to go and build something new and fresh, and we are itching to go and come give an advice, and that element is what Indian entrepreneurs are now encashing on. They look at the advisory board of each and every company, each and every startup. You will find, or a board of directors, you will find highly talented people mentoring them. Moment that comes by, see, there is a research worldwide that has happened. 80% of the startups fail if it is started by a first generation entrepreneur, but 80% of the startups succeed if there is a full-time mentor available on a fortnightly basis for an entrepreneur to call and consult.
Right.
We as Your Nest happen to find 4 advisors for us in the advisory board. We know we've met only twice as advisory board. The amount of value addition that comes in from them. After one meeting of their advisory board meeting of 1.5 to 2 hours, we are ticked that we've been stopped from making multiple mistakes. We've been advised what to do. Similar thing is what is done by the independent mentors, and they are all pro bono assignments.
Okay.
The moment you have a pro bono kind of association with these startups, you have an ecosystem in place, par excellence with anywhere in the world.
Which segments of tech startups you're targeting at?
We would love to invest in product companies. If
Okay.
in the tech startups, if there's a tech if you're talking about, product companies is the first preference of ours. Otherwise, tech-enabled companies where the IT is playing a very, very good role, either in offering financial services, non-financial services, education, hospitality, or a new emerging need kind of our customers. So it's like we are open in case it is IT-enabled, but on technology side, no services. If it is a productized company,
Okay.
we will
But
be the ones.
the tech element has to be there in the company.
That's what makes the company scalable, you know. At the kind of money that we are giving to these guys, they cannot go out and open restaurants.
Yeah.
It cannot be a brick and mortar model.
Yeah, definitely.
So therefore, the role that technology plays in most of our investee companies would essentially be to help them scale up to the next level much more seamlessly, much more faster, much more efficiently.
Yeah.
Okay.
So that's the role technology plays in pretty much the space that we are in. As Sunil said, we'll be happy to invest in product technology companies. If there is a good opportunity, we'll be happy to talk to these guys. But the focus is to use technology as an enabler at the end of the day.
Okay. As you guys have planned to, raise up to 120 crores,
yes.
right? So, would it be a continuous process of fundraising, or, would it stop at one point of time? You would invest in your companies and then look for fresh funds?
The process of fundraising for us will continue for 18 months maximum. So that's the outer limit as per our placement memorandum. Our investment cycle will continue for 3 years.
Okay.
So there's an overlap of fundraising as well as investment. Then there is a pure investment and managing the companies, and then one can look at the subsequent funds coming in the 4th, 5th year.
Okay. And, what are the challenges in fundraising in India right
The
now?
best thing that has happened is the private equity industry happened to educate the high net worth individuals about investing opportunity in this new asset class. It started happening around 4 to 5 years. People have invested in private equity, and then they started investing in real estate funds. So that education took place. Now we have come to educate them on early stage venture capital. Because there was a base created, yes, this concept selling is not easy. To allocate, to enable a person who's got a net worth of 5 to 10 crores to allocate 25 to 1 crore of rupees to a particular asset class or to a particular fund is not an easy decision. Because here the only thing is we not in line with SEBI's regulations, which says that minimum 1 crore has to be committed by a high net worth individual, which actually for India is too onerous. Yes, they want to say that it's very difficult for them to find who's the wise investor. We believe one who's allocating 25 lakhs is very, very wise investor. So if somebody is investing, he has investable for a surplus of 10 crore. In addition to property or real estate in their portfolio, they were earlier doing some equity. They have now started doing private equity, real estate fund and venture capital, and this education will keep going on.
Okay.
And the investors are also maturing. They also realize the benefits of diversification, not only from an asset class perspective, but also from a fact that the amount of frenetic activity and the coverage that this space is getting in the last couple of quarters is unimaginable. The amount of column centimeters that have been printed and the amount of sound bites that have been given on this space is a proof of the activity that is happening. And there is actually a lot of interest, genuine interest that is coming from high net worth individuals and professionals who see this not only as an opportunity to invest, but as an opportunity to meet some of their own aspirations. Everybody cannot leave everything and become an entrepreneur.
Right.
So it is actually a reflection of their will to become an entrepreneur as well at some stage in their lives, which is driving this piece as well.
Okay, thank you so much, Sunil. Thank you so much, Girish, for giving us.
Thank you.